Kunal, let's start off with you first. The last, 2-3 days have seen the market sort of attempting to, make new highs, but then cooling off from those levels. What do you think is causing this resistance of sorts? And of course, while we're at it, also share with us your high and low risk ideas.
Well, absolutely. So, good morning, Mobina. I believe that one of the reasons why the indices are, taking a bit of its own time is, some derivative parameters, which I believe is, acting as a bit of a hurdle, for the index or, bit of a pause for the indices. One of them is the, lack of or the drop of open interest. We've seen the last, 3 days, I think, except for yesterday, where we saw some built up of positions in the last 3 days. There was some, reduction to the open interest for the indices, as well as many of the derivative parameters like the put call ratio had got back into a overbought territory. So I think till day before yesterday, when the markets were at their all-time high levels, the put call ratio had gone back to 1.7, 1.72 zone. These are overbought kind of territories for the PCR ratios, and that generally indicates that it could probably warrant some bit of cool off or time correction into the indices. So I think that's been one of the reasons why I believe that the indices are taking its own time. But largely when you look at the intraday rallies, when you look at the intraday falls and then the comeback of the indices, I think it indicates that the bias is still on the bullish side for the index. So even though there could be a bit of choppiness and volatility, but I believe as a directional play, traders could probably continue to initiate buy calls even at current levels. Now, there are two set of buy calls which I want to initiate at this hour. First one would be from a high risk trade. It's a ban Piramal Enterprise. Now this is interesting because the stock is coming out of a deep consolidation over the last, I think, 1 or 2 months. Also, if you look at it comparatively as compared to its other peers, Piramal Enterprises underperformed. So I believe that there should be a significant catch up to the stock price in the near term. Hence, I would suggest a buy. Would term this as a high risk trade purely because of the high beta nature of the stock. So a buy on Piramal Enterprise, targets to be kept at approximately 1500 plus, and stoppers could be kept at 1425. The second would be a buy on HCL Tech. Now, in the morning, as well as yesterday, I was indicating that many of these IT stocks are looking quite attractive on the charts. You're seeing some buying momentum coming back into the IT names. So I would believe HCL Tech could be the other IT stock from the IT pack, which could do pretty well for itself in the near term. The stock is at 859, 860 levels. I believe from a near term view, traders could expect a 900 target range on HCL Tech. Would suggest this as a buy. Stoppers could be kept at 840 levels.
Okay, thanks for that, Kunal. Hi, Mr. Prabhakar, how are you doing? What's on your radar today? Is the risk reward looking favorable to you? And then based on that, what would be a more risky idea for our viewers and what would be a relatively safe idea for our viewers this morning?
I think the bull market momentum is in a very high swing. So there is always an opportunity in this kind of market. I think our exports to China, rice exports to China has increased. Almost other than basmati rice export, this year has been good by 65%, higher by 65%. After 30 years we are exporting. So I think short term Daawat or KRBL, which are linked to rice, will do very good in short term. And the news which came in HDFC Bank, I think that is likely to be positive for SBI cards. Today all PSU banks are doing good, so that momentum can continue for some more time. Long term, I am positive on hospitals. I have selected Max Health as the hospital which I like, which has almost 16 facilities and 3,400 beds. So the promoter group Radiant holds 49%, and the MD and CEO Abhay Soy, he holds about 23.3%. So, and they have a margin of above 16%, and the capacity utilization has also improved. So Max Life is my long-term bet, but short-term there are many stocks which are looking good, and we need to be with momentum.